Good afternoon, traders. This is Christian from Hertz Tribeca Trade Group, and this is your end of day recap for Thursday, May 5th. Holy cow, what a day in terms of volatility, in terms of reversal. I mean, what can you say? I mean, where to kind of start off, because I know that some of you who are watching this are not Tribeca Trade Group members. But many of you are who are probably watching this, and you kind of heard me go over this basically all session, but wasn't exactly what I was looking for today. I was looking for some follow through from yesterday's price action. And what I'm going to talk about, I'm going to mention this probably a couple times in this video, but the way that this trading is in 2022, I think at this point everybody knows that it's much different than how it's been the last couple of years, right? We are in a bear market, and basically trading this type of market is much different, right? And some of the things that we do on a daily basis, taking profit targets, even if sometimes they're small profit targets, right? You can't really stay anchored to what profit targets you want to make. I think I mentioned this in yesterday's video, that sometimes the profits come in basically in lumps, right? In terms of how this market is, right? You can't make the same amount of money every day. It just doesn't work that way. There's more opportunity some days, and there's less opportunities other days. Right now, this market, and I'm not saying anything obvious here, I think everybody knows this at this point, that this has been a day trader's market. The volatility day to day is unbelievable. So taking targets and things like that, even if you put on a trade at $100 and you were looking to take your first target at 105, so you have to adjust. Sometimes you have to take the target at 101, 102, because you're just not, it's not the same market in terms of being relaxed and letting winners run. You've got to be very quick with taking some of these profits and making sure that you're locking in, because it's just a different environment. Paul Tudor Jones, which I don't think I talked about in yesterday's video, but he was on, I forget if it was yesterday or the day before, on CNBC, right? And they asked him specifically about owning stocks or bonds, and he said that this is one of the worst environments that he paraphrasing, so I may get this wrong, I apologize, but he said that this is one of the worst environments, he said, in terms of risk taking that he's seen. And the follow-up question was, and this interview was on CNBC, they asked him, okay, well, what do you do with your money? And he was like, well, you have to be defensive right now in this environment. So that's the environment that we're in. And of course, half of what we're doing is monitoring for, price action, bottoming price action, or price action, heavy to the downside, like today was. So I'll go through the trade blotter. I'll walk through, some of the trades and kind of how I handled volatility. But one of the first things here is the trade blotter, but, I provide a lot of this commentary throughout the day. You could see we've got, what's kind of cool in here in Slack is that, you could provide, commentary throughout the day, which is a nice function that Slack has added recently. So that's kind of what I was doing, and talking about market breadth. Here's how we opened. I've got a really, I think, a noteworthy comment on the market breadth for the day, which I'm going to get to, but you could see how it kind of moved throughout the day. This was right after the open. I usually don't post what the update is on market breadth until a little bit later, but I just noticed that it was a little bit different today, right? This again is kind of, it's looking at up volume versus down volume, advancers versus decliners. So it puts together like how heavy, right, the upside or downside volume is, and we put like a number behind that, both for NYSE, NASDAQ, and ARCA exchanges, so that you could kind of see, like, where the pressure is coming from on a day like today it was pressure. Other times it's, could be very high advancing names, which we saw basically yesterday. The market breadth was very strong, but this just deteriorated as the day went on. And and one of the main drivers was of course the move in bonds, right? So someone said to me, so there was a move off the lows in the bonds, which is a good thing. But I think there's a lot of people putting putting stats out about just the magnitude of the move that happened in bonds today. Very interesting, because we were kind of hanging in here. Here was the last virgin point of control takeout. Again, virgin point of control, refers to where there was high volume, that price has basically gapped, over it where price didn't pass through. So here left a virgin point of control behind over here, right? And usually what happens is you get some digestion, sometimes a reversal off of the virgin point of control. You did get a little bit of both here. You got to move up here for about a week off of this. And then we kind of sat back down here, and, I wasn't sure if this was going to be a double bottom, right? And we would start to kind of move up, which would be good for equities. And or if we were going to see a move down. So again, why is this so important, right? Because the higher, so first of all, we're looking at the bond price, right? It's inverse with the yield, right? So as the price goes lower in a bond, right, what happens is the yield goes higher. Every time the yield goes higher, it makes stocks more expensive, right? Especially stocks that don't make money, right? Just giving some explanation into why this is so important. Now, clearly, this has been going on for since the beginning of this year. Bonds have been getting yields have been going up, which makes stocks more and more expensive. Now, again, what we're looking at, this is the 30-year bonds futures, right? It's very different than what the Fed is doing, right? When the Fed increased interest rates by 50 basis points yesterday, that's the short end of the curve, right? This is different. This is the long end of the curve. So this is kind of a reaction to, the Fed reducing the size of the balance sheet, as well as, some of their speech yesterday about reducing, trying to get reduce inflation. How they did that back in the 70s was they just continue to raise interest rates to get inflation under control. So this is kind of, this will help bring down inflation. Unfortunately, it will also bring down stocks, which is what we saw today. And the bigger the magnitude, the more that you're going to see that volatility transfer, move over to equities. All right. So it takes a little bit of understanding of, first of all, what bonds and what maturity that we're looking at. And then an understanding of how bond prices and yields affect equities, right? Especially names that don't make much money, right? Higher valuation names. And you could see how, this affected some of the names that are lower valuation names. There wasn't much of a move. If you look at the energy group, for example, they're not an expensive group. They're down 1.5% today. It doesn't even look like much. It could just be a normal day for them, right? If you look at other things, even like consumer staples and your cheaper names, right? Your dividend names, for example, right? They're not going to be as affected by higher yields. What does get affected is, the areas that don't make any money, right? Stocks that don't, so for example, the ARK ETF was down over 10% at one point today. So anyway, that's the concept. Let's take a look at just the price action, where we kind of finished off yesterday. One of the things that I said that, I was looking for some follow through from yesterday, but we were at a level, we kind of ran into the resistance for the week. Right. So I'll go through the major indices here just very quickly: S&P, NASDAQ 100, and the Russell small caps. So for S&P, we did run into this resistance. If you don't have the value areas on your screen, you could have also used the 20-day moving average. Right. So we were at a decision point this morning. Again, just pretty amazing when you think about, okay, you're at a decision area, it might get rejected, but I mean, this was I need another term, I guess, for the move that we had today, completely giving back those those gains. So a couple before we move on to the NASDAQ. This is probably the best news between the three indices, because number one, we didn't take out the low of what we saw earlier this week. So all this volatility and back and forth price action, right? Amazing, if you're just day trading and you're not holding any positions overnight, because that's how this market has been, right? Has really worked that way, especially not holding too much to the long side. And then, of course, the level that I've been going over all week, if you watched my videos, 4071 is still holding. It's not as strong as it looked yesterday, but we're still holding that support. Now, I want to make sure that I'm explaining myself. I try, there's a lot of things that jump around in my mind throughout the day, and sometimes I don't explain exactly what I'm trying to communicate. But this doesn't mean that we're just going to okay, we held support and we're going to blast off to new highs. It means, hey, the downside might be, it could be the possible low, right? But we could shop around. We could do a lot of different things. It could be a messy market for the rest of the year. So by no means, just because we hold support for now, right, it doesn't mean that we're going to see we're off to new highs. It's just a good thing to see us kind of approach that level, the 80% rule complete through the value area, and possibly we can kind of work our way off of that low. That's what I'm trying to communicate with this. Let me just go through the other two indices, and then we'll talk about that market breadth that I want to get to in just a second. Now, we talked about this before, and I personally, because I'm using the price action to give me this, but I don't think the downside is in for NASDAQ. Right, we have not gone all the way through to the bottom of value. Again, if you want to use the Qs, because I know a lot more people ask me questions about the Qs than NASDAQ futures, but 297.74. Now, again, so how do I use that to my advantage, right? Well, I just don't really, I'm not trading much. I'm trading I'm trading more things that are in the S&P than are in the NASDAQ to the long side, right? And I am doing a little bit more shorting in NASDAQ names because I don't think the bottom is in yet, right? Now, if you're not a person who loves to short or to play to the downside, then what you do is you just kind of, and if you agree with me on this, and by the way, I'm not giving out any advice or recommendations. The whole risk disclaimer is right over here that you could read through. But that's my view, is that the downside is not in, and I'm not really playing too many things until I see better price action, or at least more consistent price action. All right. And then, so that's the level that I'm watching. Again, if you're a regular viewer of these videos, I've talked about that for a while. The other thing I would watch is, I think we did kind of get very close to this week's, we actually went through it, this week's lows, but we're kind of holding above the range. Do I put a lot of faith that this is going to hold? No, I don't. We've got a jobs report tomorrow. We've got tons of Fed speakers, I believe, that are slated to speak tomorrow. So who knows what they're going to do. They start talking about more and more rate hikes, and depending on how the jobs number, the reaction to the jobs number is, I wouldn't be surprised if the low gets taken out, right? And then finally, Russell futures. And I'm not making a prediction there. I don't really have anything on right this second for that. So I put this out yesterday. If you saw my tweet, I can find this really quick. If you saw my tweet from yesterday, I sent out a chart and I didn't put what the symbol was, right? And I asked people, and I did put out a video about this, but I said, it's time to play buy, sell, or do nothing, right? As kind of a game show type mentality. And I got different answers to this, right? And the reason why this is interesting is, just to basically, let's see if I can get rid of that. There we go, right? This is a decision point, pivot point, and that's why I sent it out last night, right? Either you're going to manage to rally and get into get above resistance, right? Or you're going to retest, this is a retest of the breakdown of this range, right? Either you're going to fail here or you're going to chop around a little bit. What I thought was the right thing to do was to wait, right? Well, you didn't have to wait very long. Here's your rejection at the bottom of value, right? So again, breakdown, retest, right? Retest, just like in an uptrend, how you kind of retest like the 20-day moving average in an uptrend, and that's usually a decent place to buy in an established uptrend. Well, here's your failure, right? And a move down. Now, again, the positive here is that the lows did not get taken out, but I think that we are, if I had to guess, I would think that this lower V pocket's taken out. Okay, that's my thought. So I think S&P strongest, and then I think, for the IWM, I still view this as weakest because this is the only one that's below value, right, for the year, while the S&P and NASDAQ are inside value. Okay, so let me get to this. So sorry, that's a little bit longer-winded explanation, but I try to give as much analysis as possible. So let's talk about this on the bottom left of the screen, right? Market breadth, right, which is measures up volume and down volume. Right, so not just advancing names or declining names, right, which is just a number of how many names went up, how many names down. What we're doing is we're incorporating the volume with this too, right? And you could see, I have this that you could see it over time. You could see that this is the worst breadth, right, of this year, right? And actually the worst breadth, you have to go all the way back, right? We actually had one here, right? And basically all the way in here, which was a crazy day too. This was all the way back in here, and then you could also see that we had this really bad breath back in the pandemic lows, right, in here. So what I would say is I think because people are looking sometimes to kind of time the bottom. First of all, I think that's impossible to do perfectly. I think that's a loser's game, trying to time the bottom perfectly. I think you need some confirmation, right? And we just haven't gotten that confirmation yet, right? But I think one of the things that might be a good thing is actually seeing breadth get this bad, right, from a contrarian standpoint. So you could look, right? So why don't we investigate this one in here? Now, again, this was worse breadth, and it basically just happened on 1 to 2 days. So let's zoom in here, and you could judge for yourself what ensued afterwards. So on this particular day, this is where the breadth was really bad, and it was just kind of a 1-day type thing. Now look at what happened the next couple of days. Well, we kind of went lower and we snapped back 2 days later. We spent some time, maybe about over 2 weeks, a little bit over 2 weeks, I guess, 3 weeks maybe, digesting, going sideways. And then look what happened thereafter. All right, a decent rally ensued. Now, again, it's different. The breadth was not nearly as bad. So I think sitting tight here and just realizing that it may take a little bit of time. It may not be just a 1-day event. You may not see that snap back right away. And again, you could go through a couple of these things where we saw really, nasty breadth. Here was another one that was kind of more similar to today. Let's see if I can fix this. All right, was it this one? You could see, sometimes you gotta, hang around this bottom for a little while. But the point that I'm trying to make is it's actually a good thing to see the volume get this nasty to the downside, right? You can see reversals that do form after it, but like anything else, you have to be patient, right? So again, I'm trying to line this up. This particular day, I think we actually did go lower, right? But then you've got to look to the right of the page, right? Once you get that kind of nasty, again, I don't want to say, capitulation, because I don't like that term. but it does kind of shake itself out when you've got that heavy selling pressure. So I view that as a good thing. By all means, let me know if you have any questions. Again, I'm not saying that tomorrow or next week the market rebounds. I think it's a process, right? And you've got to be patient with this, right? And let it happen. I could tell you too, we were talking about this in the trading room today, which, it's just very easy because it's not that long ago, what happened back in here. In this case, the capitulation volume, this was a little bit different. Let's see if I can fix this, right? There was heavy downside volume here. And then notice, even though you kind of saw like a little bit of a divergence with that. Now the price kept on going lower and lower. So it's important to realize that this volume could happen. And again, it did not mark the low. We were higher, about a month later, but you got to kind of sit tight and let the price action also confirm. So again, the reason why, it's important to kind of look at the situation where you didn't get, a move higher right away. You have to use multiple factors. I think there's too many people that are looking for one thing to be like, oh, that's it, right? And oh, that means we're going to go higher now. I mean, it's a combination of factors, and sometimes the factors have to kind of line up. So bottom line is be patient. And I think that this is while this isn't as extreme, and it doesn't, in my opinion, it doesn't need to be as extreme as it was back in, when we had a shutdown for the whole world, in terms of that. But I think seeing this type of volume go this breadth get that poor, I think it's kind of ticking a box in terms of this move that we've seen recently that could hopefully kind of get us to where we need to be, maybe weeks, maybe a month away. We'll see how it goes. So again, what I'm watching, right, and we're just talking about the S&P. I think it's a good thing that we actually had this heavy volume to the downside, and we didn't break the support. So 40.71 for me. And again, we could actually go lower here and bounce back up too. That's in the cards too. These things are not that, nothing is that precise. All right, so that's it. I mentioned the trade blotter, and I would talk about this a little bit. Right, so remember yesterday, I went long. I day traded TQQQ. That worked very well. Took that off yesterday. I day traded SHOP. That worked just because I thought people were kind of caught off guard with yesterday's price action. I actually traded some some dash short. I didn't stick in the trade too long because I knew that they reported earnings today after the close, which I think that might be a shortable. I think dash might be a shortable bounce. Let's go to the 1 hour chart. As long as it, I mean, here's your two levels. If you're looking to fade DoorDash, which I am, $82 is the first level of resistance. The second level is going to be 88, right? So, perhaps this might stay around here for a little bit, and then move back down. Why am I interested in shorting Dash? Because if there is going to be, if people are really being hit on the margins by inflation, food inflation, I mean, I don't understand how people are spending this much money to pay for delivery when food already costs that much. I'm certainly not doing it. I never really understood the point that you're going to spend that much money, service charge, and then a tip for DoorDash. And I don't know, let's see how long that lasts, but I'm old school. I just don't think wasting money like that is the right thing to do. And that's why I think like this would be the first thing that would get cut, is that you actually walk or drive and go pick up your food. But anyway, so I'm sure somebody will argue with me that they do something other that's genius, but I don't believe it. And then a couple of trades. So I mentioned this, as kind of an indicator as the day wore on, is that once I saw that bonds were doing what they were doing and market breadth was not looking very good, I just, I stayed in a couple of these trades for about 20 minutes through the session. I saw the writing on the wall, and I got out of TENB, which I put on yesterday, or re-added yesterday. Home Depot, which actually went below, which should, I should never do, but sometimes I do like to wait for just a little bit of confirmation. But this one, just the last piece of the trade went underneath my cost basis, out of it, right? Apple was another thing where I added a few calls yesterday, out of it, and I actually was able to get out of it. So it wasn't, the calls didn't go to nothing because, the VIX moved up so much. All right. XLI, there was a huge amount of July 95 puts that traded. And, it just kind of made sense to me, if you look at the XLI chart, that this was also into some resistance, right in here. So it is actually just an inside day. I took a couple targets in this one, as always. 430, paid 340. Bitcoin, right? This was a trade that I actually, sorry, I'm not going to spend too much. This video is already long enough, but I had put on a trade 2 days ago and it didn't work out. Whenever I trade weeklies, I just keep the weeklies on, right? The reason being is, like, I view that in this sense, in this trade, I paid 44 cents for weekly puts, right? The stop is the premium, right? I never stop myself out of a weekly trade. That's ridiculous. I try not to spend that much premium on a weekly trade as well, but 44 cents is the stop, right? The most you can lose is the 44 cents. So this trade went down to like 15 cents yesterday, right? And I was able to take that off, as Bitcoin looks like it's breaking down. Heavy, you saw this price action. And this did actually come in and take out a virgin point of control, which is why I took the trade off. You'll see that coming in just a second, but yeah, I mean, those were two big whooshes down here in Bitcoin. All right, so I took this trade off. Now I took targets all along the way, but the last thing was 80 cents. It's tough. It's tough to get these to work out, because the volatility as well as the theta decay is huge. Even though the price of the underlying went much lower than where I actually added it. You might have to sit for it might take some more time before this VPOC comes in, because Thinkorswim is crunching all the data. But there is one that we kind of hit right on the low of the session. Right? Another trade that I liked was MSTR, which is a play on this. So I put that trade on for 650, $20 wide put spread, and there it is right there. All right, so we're actually above that virgin point of control. Again, Thinkorswim, our indicator, huge amount of coding on it, so it takes a while. And then I try to pick and kind of add some things that are in uptrends. I like how Exxon looks here. It was down about 2% today, closed a little bit off the lows, but nice move off the lows, filled this little gap. So I did add a little bit of that. All right, guys, that's it. So, the main thing, I would say, the theme in terms of trading, right, is something that you hear all the time, is that it's okay to be wrong. Everybody's going to be wrong with this market, right, from day to day. You can't be perfect every day, right? And I hope that I hope that everybody understands that. You come into trading, there's no way you're going to be right every day. The whole, what's important is to not stay wrong. So as soon as I figured that I could be wrong this morning, I took off my trades. You don't let your losers run, right? Cut your losers off quickly. And between the 2 days, even though I had some winning trades, to get out of those trades in the beginning of the day cost me a little bit of money. But for the 2 days, I'm up nicely, right? So that's the whole thing. You have a big day, one day, which I did yesterday. You try not to give it back. That's the whole, that's a big part of the game. All right, guys, a lot more to talk about, but I'll leave it there for the day. Have a great night. I'll see you tomorrow.